In this video, we're going to explore a super profitable scalping strategy that works on the 5-minute time frame. This strategy uses only 2 free TradingView indicators. We're going to explore what these 2 indicators are, the best settings to use, as well as the entry conditions. If you find value in this video, remember to leave a like. Let's get into it. Now, let's begin by adding all the indicators needed for this strategy. On TradingView, you want to open the indicator search tab and type in Polynomial Regression Bands. This one by Donovan. Type in Hawkeye volume. This one by AA Monkey. Double-click on the Hawkeye volume so we can change some settings. On this tile tab, you want to reduce color zero's opacity to 0%. Change the plot color to white. I'm also going to reduce its thickness. And then click OK. For the Polynomial Regression Bands, we're going to go to this tile tab. And then here, we want to disable the first option. And then on the Inputs tab, we want to disable these 3 options, as well as the Show Regression Equation option, and then click OK. Now, as you can see, our polynomial indicator has 3 bands: the lower band, the upper band, and the middle band. We're going to be using these 3 bands to enter our positions. If the price gets to the lower band, that would indicate that the market is overextended to the downside and that there is a probability that it may try to go back up, probably all the way to the upper band. The same thing happens here. Whenever the price gets to the upper band, that increases the probability of it coming back down. And of course, we're going to be using the volume indicator to ensure that the market has enough volume for us to take these positions. Next, we're gonna go over how we can use these 2 indicators to take positions. But before that, let's talk about the forex broker called HenkoTrade. Now, I've been using HenkoTrade for quite some time. As you can see here, this is my live account. The reason why I think HenkoTrade is a great broker is because of their low commissions as well as spreads that go as low as 0.0 pips. They also have a maximum leverage of 1 to 500. You know, for those of us who love high leverage. If all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,000, well, guess what? They're going to give you a bonus of $3,000, giving you a total of $6,000 to trade with. To access the bonus as well as all the other perks, sign up to HenkoTrade using the link in the video description. Now, back to the video. Now, let's go over the conditions for taking positions with this strategy. So here I have a list of all the trades I took using this strategy. Basically, all the trades from the month of April. Let's go over them. So here, this was the first entry. As you can see, it was a long position. Now, you may be thinking,
but what are the conditions that you were looking for before you decided to take that long position?
Well, here they are. You basically look for the price to touch the lower band of the polynomial regression indicator. After that, we want it to go straight up and cross above the middle band. And then after crossing above the middle band, we wait for the band to change color to green. After the band changes color to green, we ensure that the first candle above the green band is also colored green, you know, like this. This becomes our entry candle. Then lastly, we want the entry candle to also have enough bullish momentum to push the price, you know, where we want it to go. So we take a look down here at the Hawkeye volume indicator. You want the corresponding histogram bar to be colored green and to also close above this white moving average. And as you can see, all the conditions were met on this candle, which means on the opening of the next candle, we entered a long position. The stop loss goes right at the most recent swing low, as you can see. And for the take profit, well, we're going to target a risk-reward ratio of 1 to 1.5. Looking at this trade, you can see that it was actually a profitable trade. Now, taking a look at this list, we can see that we have this arrow right here. These arrows basically represents trades that we lost. So the arrow is pointing at something somewhere here where we were supposed to take a short position. So let me just use this to give you the conditions for taking a short position. So you basically wait for the price to touch and reject off of the upper band of the polynomial regression indicator. After the rejection above, the price needs to come straight down and cross under the middle band. After the cross, we ensure that the middle band is colored red. Right here, it was actually colored red on this candle. So that condition was met. And then we also make sure that the crossover candle itself was colored red by the indicator. That condition was also met. So that makes this candle our entry candle. And then we want to ensure that this entry candle has sufficient bearish volume to push the price all the way to take profit. For that, we just make sure that the corresponding histogram bar on the Hawkeye volume indicator is colored red. It should also close above this white moving average. That condition was also met, which means this was actually a valid entry. But as you can see, if we were to take a short position here, our stop loss would sit at this swing high, which means it would have been a losing trade. But that is totally okay, because our next entry was this long position and the trade was actually profitable. So as you can see, the price rejected off of the lower band of the Polynomial Regression Indicator. It headed straight up and closed above the middle band. After the close above the band, we waited one more candle for the band to turn to green. After the color change, we ensure that the last candle, which was this candle, is also colored green. This becomes our entry candle. The final confirmation is to ensure that the entry candle has a sufficient bullish volume to push the price all the way to take profit. For that, we make sure that the corresponding histogram bar on the Hawkeye volume was colored green and that it also closed above the white moving average. All those entries were met on this candle, and that's why we had this long position here. And as you can see, the trade did not hit our stop loss. Instead, it actually hit the take profit. We had one more losing trade here. Then finally, let's just go over one last entry. Oh, we actually had two entries here. Okay, so this was a short position. All the conditions were met. We had a rejection off of the upper band. After that, the price headed straight down and closed under the middle band. After the close, we waited for the band to change color to red. That happened on this candle, which makes this candle our entry candle. Now, as you can see here, the entry candle itself was colored red. Looking down at the Hawkeye volume indicator, we can see that the corresponding histogram bar was colored red. It also closed above the white moving average, indicating that there is enough bearish momentum in the market for us to take this short position. And as you can see, it was a profitable trade. Now remember, a rejection isn't just about the price touching the band with the wick. It can also close on the band or even close under the band. There are even candles that completely open and close under the band. All those scenarios are valid rejections. So right here, as you can see, all these long and short positions were profitable trades, which means this strategy was actually super profitable in the month of April. While I did my presentation on the 5-minute time frame of GBP/JPY, well, a strategy like this can actually work on higher time frames, like the 1-hour time frame, the 2-hour time frame, or the 4-hour time frame. If you have any questions about this strategy, well, let us know in the comment section below. That's everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.